Going to be ringing in about just 5 minutes or so, and we have got a lot to tell you about right now. The Dow actually did go into negative territory. We're back above the green, the break-even line, but we're only up by 56 points. Remember, the Dow was higher by 459 points earlier, so we've had quite a volatile session on the markets. As you can see, S&P, NASDAQ, Russell 2000, Dow Transports all are in the red. Let's take a look at Sysco. It's at the bottom of the S&P. They confirmed they're buying catering supplier Jetro Restaurant Depot. $29 billion deal. It includes debt. The goal, expand the top U.S. food distributors' reach among price-conscious independent restaurants. Think smaller restaurants. Sysco is tanking. It says it's financing the acquisition with $21 billion in new and hybrid debt. So our closer has his eye on the second biggest U.S. food distributor, which Sysco also tried to buy actually a decade ago. Let's bring in Argent Capital Management Portfolio Manager Kirk McDonald. So this is U.S. Foods Holding Corporation. This is a better play in your opinion than Sysco.
Absolutely, and thanks for having me on your show. So at Argent Capital, we like U.S. Foods as the #1 pick in the food service distribution industry. We like the industry, first of all, because the big three, which would be Sysco, U.S. Foods, and Performance Food Group, control about 36% of the market. The top 10 only control about 50% of the market. So there's a huge runway to continue to roll up that industry and grow through M&A. Additionally, with U.S. Foods, they're outgrowing their competitors by two things. First of all, focusing on the fastest growing segments in food service distribution, which would be independent restaurants and healthcare and hospitality. And they also are increasing their mix of private label, which is very, very well liked by their independent restaurant customers. And it carries twice the profit margins for U.S. Foods while also being less expensive for their customers. So at the end of the day, U.S. Foods.
I'm sorry, I didn't mean to interrupt you. I want to get to the bigger story with the markets with you. We've got a lot of macro topics to get to, Kirk, but I do want to hit your other pick because I think it's interesting. This is Federal Signal Corp. FSS is the ticker. They basically make specialized equipment for municipal government industrial customers, vacuum trucks, street sweepers, dump truck bodies. Sometimes boring is good. Talk about this one real quick.
All right, exactly. Like nobody really gets too excited about sewage trucks. However, by focusing on these small niches of highly engineered, customizable trucks that are produced in very, very low volumes, they're able to dominate their niches, and they have #1 market share in 9 out of 10 types of vehicles that they manufacture. And so while these trucks might not be super exciting to people, the fact that they've compounded earnings per share growth at 19% a year over the last 5 years and last 10 years is probably pretty attractive since the stock price tends to follow that earnings per share growth. Yeah. So we like Federal Signal as a compounder.
There you go. The FSS is the ticker. It's on the screen right now. So backing up here, how are you telling your clients, how are you investing right now? Because we are headline driven. The markets are highly volatile. A Truth Social post can turn the market around as it did today, or in this case, comments from the White House press secretary about negotiations with the Iranians. How are you telling your clients how to navigate all of this right now?
Yeah, really right now, 3 different things. And first of all, to try to look through this, I think we'll be incredibly volatile, as you mentioned, just based on tweets and headlines from day to day. The market will go up and down in large amounts. Second of all, just regarding would be the Strait of Hormuz. Obviously, if that stayed closed for a long period of time, be horrific for the world economy. But as Herb Stein famously quipped one time, if something can't continue, it will stop. So I don't think the world's going to allow the Strait of Hormuz to stay closed for an extended period. And lastly, the economy is still overall strong. And in 10 out of 11 years since 1996, when the earnings per share of the S&P 500 has grown 10% or more, the market's finished the year higher. And we're in that situation right now. So overall, try to look through this volatility, take advantage of it where it hands you opportunities. And at the end of the year, at the end of the day, at the end of the year, I think we'll be higher.
Okay. And as far as the data we're going to get this week, we've actually got the March jobs report on Friday. We've got retail sales on Wednesday. How much weight do you put into these reports, considering that these are actually backward looking?
Yeah, they're actually backward looking. So I'll look more at the ISM numbers when they come out on Wednesday, and that will give us the first look of how things were since we really started the war with Iran. So I think that's the most important thing. How is the industrial economy going with the ISM numbers? And Hopefully they'll come out okay, but really at this point in time, it's too hard to tell on that. So once again, just try to look through the day-to-day volatility, take advantage.
There you go.